First rates, just rubbing my hands with a lot of disbelief. And there you go, it's a good start. Nifty, Sensex, Bank Nifty, all of them are off to a good start. What is driving the Bank Nifty has to be HDFC Bank, I would imagine, because there is an MSCI impact also, which should be there on a stock like HDFC Bank. So there you go, HDFC Bank 1629. So we're off to a good start on HDFC Bank, off to a good start on ICICI Bank, off to a good start on Kotak. Now the newsmakers, and needless to say that when you say newsmakers or the action-packed stock, railways, defense, railway defense, shipyards. Kotak Mahindra Bank, now RVNL 6%. You got let's look at all the railway stocks. Ircon International up 10%. Let's look at IRFC up 9%. Reeps up 2%. Now let's look at defense. Kochi Shipyard, Mazgaon Shipyard. Let's throw in even Garden Reach. All these stocks are up 1 to about 4%. And last but not the least, you've got the pure defense names. You've got BAL, BML, a whole host of defense stocks, which in a sense have pole vaulted and they continue to chug along. So railways is the top theme, and that's where all the price action clearly seems to be chugging along very, very smartly. Can throw in power also, Aisha, but I guess it is an extension of what we saw last week.
Yeah, NTPC, Torrent Power. Remember that 4,000 megawatt gas-based power procurement tender, which is going to be floated, is going to benefit both of these. Of course, RBN and IRCON, you can't take your eyes off from those names. The rail corridor, which is going to be set up between India, West Asia and Europe. PVR Inox as well. Let's check in on that. Extremely strong bumper collections for Jawan. It's opened another 4-screen multiplex as well in the state of Karnataka. So look out for that as well. And then Adani Ports too, which has, wherein the promoters have acquired an additional almost 2.25% stake from August 14th to September 8th. That's going to be the other stock in focus. Reliance, Nvidia has inked an agreement with the company and the Tata Group for advanced AI tech. So let's check in on those names as well. Reliance and Tata Elxsi will just come off you on your screens too. Also, Adani Enterprises, they've signed a JV with Singapore's Koa Holdings for ammonia and green hydrogen business, pretty much in continuation with the theme across G20. Not just that, IRB Infra, some very strong toll collections for the month of August. HDFC Bank, let's see what the impact of ICRR is on not just HDFC Bank, but some of these other private banking names as well. There's scams as well. They're expecting a very strong AUM growth, so look out for this stock too. Then, of course, Praj Industries and the entire sugar pocket, that's also looking very, very strong. The GBA, which was launched on the sidelines of the G20 summit, 6.5% of a move coming in on Praj. And the sugar names as well are looking mighty sweet. For the Nifty though, it's a lot more tempered a move, 19,890. I don't know where the weakness is coming in from. If we can just bring up the list of losers, because yes, a large concentrated pocket within the broader end of the market is looking strong, but you're not really seeing that translate onto the benchmark, so to speak. Just about touching that 19,900 print and trade. Actually, lots in the red. IndusInd Bank, LTI Mindtree, iShares, Infosys, Unilever, Titan, M&M as well, HDFC Life. So let's see which way we head from here. Kunal, a tempered reaction as opposed to what we were anticipating, or you think it's par for course?
I think it's a decent start. 75 points for the Nifty, 150 plus points for the Bank Nifty. Premiums for both the indices remaining at, I think, above the Friday's level, 45 points for the Nifty and I think 160-70 points for the Bank Nifty. Overall, looks quite okay. Large cap stocks, again, seeing a follow-through price action, so that's a good sign for the index. Now, in terms of opening trade, HDFC Bank is something which I highlighted a couple of days back. Would continue to be bullish on the stock and expecting the stock to at least head towards 1680 levels on the future. So, possibly an upside of another 40 to 50 rupees for HDFC Bank over the very near term.
All right, let's find out what's on Naresh's radar. Naresh, what is it that you're picking out for the day?
So looking at ONGC, the stock looks setting up for a breakout above 187 mark. So preempting with a buy here at current levels.
Devina Mehra joins us. Let's take our conversation forward. Chairperson and Chief Investment Strategist with First Global. Devina, good morning. Thank you for joining us. All I can say is that the bull run continues. And what is the best way to participate in this bull run? That is what I think everybody wants to know from you.
Good morning, Nikunj. So last few times I have come on your channel, I have said this, that the markets. In the markets, it is now the risk is in not being invested rather than in being invested, and we've seen that. I mean, I've been saying that from March. Right now, actually, I have my view is like kind of in two pockets. So if I look at the large caps, that continues to be my view. That as I've said before, while we have this figure of 15-16% compounding in equity, that varies very widely, not just from year to year, but even decade to decade. So if you look at the 80s, if you had invested 100 rupees at the beginning of the 80s, it would have become 700 by the end of the 80s. Whereas the 2010 to 20 decade, it went up only 2.3 times, barely beating fixed deposit returns. So there was a lot of room created for, and even if you look at this decade, we have only compounded some 12% because we had this very bad year of 2022 for the global markets in the middle. So it's not as if that you're way above the trend line and now there's like huge way to fall. So that the positive thing on the large cap side remains. As far as small cap and mid cap indices are concerned, they've had this, depending on which index you look at, 35 to 45% run since March without a correction. And that's where I see some reason for caution, because even a 5% correction in that index can mean 20% correction in individual stocks. And people again forget history, that how long these pockets of the market can give you pain. If you look at 2008, after that crash, that level came back, the small cap index in 2016. And even if you look at, and there was like a brief bull run in the middle, and then again from 18 to 20, you had again a 65% correction, which meant that 90% of the stocks were down more than 50%. So and also in all this, the index itself is also not very representative, because I was looking at how often the stocks in the small cap index, for instance, are churned, and it is like 18-20% in a year. So in 5 years' time, you practically have a new set of stocks. Some of them may have migrated upwards, that they're no longer small cap, but a whole lot more just go out completely. So that's the side of the market where I'd advise some caution. And I was looking at mutual fund flows. Most of the flows have been going towards the small cap end. So, that's the place where investors need to remain cautious. As far as the large cap side is concerned, of course, you have to pick the sectors, but overall, I still remain positive.
How should one look at railway, defense and shipyard companies? I mean, logically, what is the way to looking at them as an investor for someone? There are two scenarios which I get. Scenario number one, that these are euphoric stocks, P multiples the businesses cannot command this kind of an P multiple. So in your understanding, what is the right P multiple for some of the so-called defense and government dominated stocks?
Very difficult to come up with a PE multiple, the cuff, because especially I'm sure it will vary from company to company, because depending on the outlook for that individual company. We have bought some defense stocks off and on, but we always try to limit our exposure to things which are too uncertain, too risky. I mean, same thing with small cap. Even when you see momentum in the small cap, in small caps, you can get in easily, get out with much more difficulty. So we might go from 15% small cap to 20%, but we won't go to 40%. So, I mean, as I said, individually, some of those stocks which look good, we have bought, but as a pack, in fact, shipyard companies, etc., probably not even looked at that closely. Defense, as I said, we have bought, even globally, we bought at a point in time. So, I mean, I would be careful and also not get carried away by euphoria, because oftentimes, many times the announcements that you see and what actually happens in terms of numbers, there's a gap. So you have to go into each company quite deeply.
We've seen a comeback in IT and perhaps an underperformance in banks. If I look at IT, the situation is not scary, but it is muddled. If I look at banks, the outlook is crystal clear. What should one go? go for go for a sector where outlook is muddled but could change, or stay with banks where the outlook, at least in the near term, is crystal clear?
Well, I tell you what we have done. We have cut back on our bank exposure in our last rebalance. And I kind of disagree with you. Maybe not in the very near-term outlook, but if you look at a longer-term outlook, I would think the thing is the other way around, because as I've said often, maybe it is just a bias in my head that I am a nervous investor in banks, because I believe that you will always see more negative surprises than positive surprises in a lender. And that's one. And because and as an outsider, you can't even know when or where the negative surprise will come. That's one. And IT, in fact, has a great visibility if you look at a longer term perspective, because the fact is that the world is moving, digitizing more and more. There is more and more technology coming into non-technology companies also. So, there can be a small hiccup when your markets are not growing as much, and therefore, as I've said before, the sales cycle gets pushed. So something you think will, a deal that you think will close this quarter might take 2 quarters, but it eventually comes, and there is, I don't see great downside risk there. So, we're not heavily overweight IT, but still, that's a relatively outperforming sector as per our systems, especially some of the mid-cap IT names.
Okay, fair enough. I'm just curious to get in your take as well as to how you're reading into new age tech as a space, Devina. Given the fact that now we have seen a comeback or a turnaround of sorts, if you will, within this basket, would it merit a relook according to you? And what have you made of the progress made?
Yeah, you can look at it again. We haven't yet dipped our toes in it. Because now of course, always in such companies, it just because something comes down 50% doesn't mean it, or even 70% doesn't mean it necessarily becomes attractive. But some of the fundamentals are changing. We're keeping a look, but it has not become a thumping buy for us yet. So we haven't really gone into it. And as I said, our first step in the process is to manage the risk, and there are enough opportunities where the predictability is higher. So we have stuck to that.
Okay, fair enough. And I wonder if you've, had also a chance to get in a sense as to what's happening with some of these capital goods stocks, and given the fact that we are seeing the overall order momentum as well picking up, rail, defense, and the entire gamut, and in particular some of these capital goods stocks, what would be your outlook?
Capital goods actually is the one sector we were very heavily overweight for now 2 years. October 2021 is when we went overweight, and that has been consistently in this entire period one of our best performing sectors. So, people seem to have discovered it only in the last few months, but we have actually been evaluating every quarter that is the run over, because we've been invested in it that long. But till now, our systems have not signaled that the run is over. At times, we have, of course, switched stocks, booked profits, because some of those stocks went up 2 times, even 4 times. But we still remain, as of now, our systems still like it, and we still remain positive. Of course, you must also remember that it came out of a very long period of underperformance. So, this was a dog sector all the way from 2009 to 2021. So once we could see that the fundamentals were changing in terms of the order book and demand, and also because they had gone through so much pain, the costs were cut to the bone. So, the companies were all lean, mean, and ready to take advantage of the uptick in the demand. And that has happened. So as I said, a considerable part has already played out, but doesn't appear yet that run is over, and let's see how it goes.
Okay, Devina, great to have you on the show. Look forward to chatting with you. Glad that you could take time out and join in.
Thank you.
Okay, let's move forward and let's talk about the hottest sector, and that's really been railways, right? Especially after the mega economic corridor which got announced on the sidelines of the G20 summit. Let's try and understand the implications, what it means for the economy, what it means for the railway sector, and yes, what it means for specific companies like RVNL. We have with us Rajesh Prasad, the Director of Operations at Rail Vikas Nigam Limited, joining in on the show right now. Mr. Prasad, thank you so much for taking the time out and joining us today on ET Now. Help us understand what exactly does this multinational rail deal link, which has been announced, which is going to link India with the Middle Eastern countries and EU. What does it really mean? Is it really that big a game changer of sorts?
So, very good morning, the ISRG, Awaneji, and Mr. Nikunj. Only 1 month back, I got connected to your esteemed TV channel, and then we discussed about the Q1 number, margins, then business outlook, way forwards. And today you have come out with some new questions, new ideas. The post G20, what will be the future outlook for this company and the railway sector. So first of all, I would like to congratulate in advance. This is RVNL is a engineering construction company, and we are going to have Engineers Day on 15th of September. So congratulations to all the esteemed TV viewers. This time the theme is engineering innovation for the resilient world. And this is what exactly was outcome of the G20. So the taglines, which I could follow some of the taglines which were on the background, backdrops, Vasudhaiv Kudumbakam, that is one earth, one family, are the future. So basically, it is a kind of a making quality infrastructure investments in the economic corridor. And this particular corridor will basically run from India to Middle East, then Europe, and this will have the rail segments as well as the shipping corridor. RVNL is having plenty of experience in the creation of the rail infrastructures. Till last year, we were contributing more than 30% of all the railway infrastructures in the country. And in the shipping corridor, we have already started executing the marine works at Maldives. See, these particular corridor has just now been announced. A lot of things have to be done. In fact, the timeline which has been given is that within 60 days, all the countries, the representative of all the stakeholders will meet again, and they will draw the roadmap. So nothing more than this is available in the public domain. But we are very keen and we are eagerly watching for this because this is our strength. And it is part of the PZII. What exactly is the PZII? Is the basically partnership for the global infrastructure investments. So a lot of investments will come. And since RVNL has got the expertise in creation of the rail infrastructures, we have already getting diversified into the marine sector. So we are very keen in contributing these kind of infrastructures. And I am 100% sure that RVNL will be playing a major role, a mega role in this particular corridor. So we are waiting.
It's great news, sir. I mean, it's a great news that a corridor like this will come up. I mean, we were discussing in the morning that when Silk Route was discovered, it changed the way how trade was done. My question is that for the listed entity, which is RVNL, when do you see the real impact will start kicking in your financials? Could it be FY 26, 27 or even beyond that?
This will take some time, but it will be a high priority corridor. And this will be executed on very fast track. And every country which are getting associated, the Middle East and all the countries part of the Europe, they are very keen. Even the US is very keen. And His Excellency Joe Biden, the President of USA, very specifically mentioned about this particular corridor. So we are watching it. And our rail portion will be basically in the UAE, Saudi Arabia, Jordan, and Israel. And future of RVNL looks very bright. Very bright, sorry. And I can tell you that in time to come, within 60 days, the roadmap will be drawn. And regarding the revenue and when exactly will be implemented, it will take some time. The project life cycle starts with the concept, design, the estimate, the studies, feasibility studies, financial studies, and then it really gets executed at site. So it will take some time, but we are very hopeful because all the countries representative have agreed for this kind of proposal, and this is for the overall growth of the world. and it would increase the prosperity amongst all the countries. It will help basically to deal with the lack of infrastructure for the growth of the some lower and the middle income nations. And the most important part is that it has got the sustainable. It is a sustainable project which will basically lower the green carbon emissions and the green corridors. So we are very hopeful, and it is only a matter of time. Maybe down the line, 2 years, you will find RVNL in mode of execution of this particular project. Some part we will get associated. We are 100% confident about this.
Okay. What could be the size of this corridor? Because I'm sure there are parallels here.
It is yet to be disclosed. See, it is just on paper. Some map has come where the corridor, which is the rail corridor, and the shipping corridor has been shown. So next, within 60 days, whatever meeting takes place, they will come out with the kind of the detailing, the roadmap, the estimate, the cost, the timeline for completion. But since we have got the expertise of creation of railway infrastructures, and now we are executing all kinds of infrastructures, we have already transitioned from the local rail infra to global all infra. So we are 100% confident that in time to come, you will be seeing RVNL taking some responsibility of execution this prestigious corridor.
What role do you think you will play? I'm just asking very basic questions. You'll appreciate the spirit of my question because, I mean, you know what's happened to your stock. Everybody's excited. So let's say if the project goes as per what the plans are, what role you will play?
If you try to understand the strength of this particular company, it has got the basically strength and the proven track record of execution, the complete project life cycle. That is from the concept, design, estimation, feasibility studies, DPR, then tendering process, contract management, execution, then the defect liability period, and then handing over for operations. We are also keen to enter into the operation part. So what I want to tell you is whatever portion of the project life cycle you can think of, we can be associated with that.
All right. Give us an outlook as well when it comes to your further paring of stake by the government after the recent OFS. We saw the government offloading up to 5.4% stake in the month of July. What is the outlook on that front?
I will take some time here because the Honorable Prime Minister has been quoting it is an old quote: reform, perform, and transform. So around 3-4 years back, the assignments got stopped. Then IPO came, OFS 1, OFS 2, we got listed. And then the COVID came in 2021, and the post-COVID, when the entire supply chain got disturbed, we performed exceedingly well. Even during the COVID year, we exceeded all the physical and the financial records, and which we kept on improving in the subsequent financial years. Now the transformation is on. Earlier we were in only the rail sector. Now we are executing all kinds of infrastructures, and not limited to India. We are now trying to get some works in overseas also. So what I wanted to tell you is that from local rail infra to global all infra, this is the tagline we had given. See, last week on Saturday and Friday, I was there in Indore, the first 2 metro projects of Indore. We are going to have the trial in the month of September only. Today is again a very auspicious day. We are going to have the commencement of 3 underground metro stations in Chennai Metro Corridor. When I was coming to office, I got a call that Gemini, Thousand Slice, and TL crossovers, some Bhumi Pujan will take place, and the director CMRL is coming to the site. So it is an exciting company, and we have always been working and seeing that what should we do so that we will grow to the next level. And we have been growing. And touchwood, we have been part of creation of a lot of railway infrastructures, and in time to come you can see that in all kinds of infrastructures. And this particular corridor, this economic corridor, we are very, very excited about this.
Okay, that's good to know. What about the metro and non-railway projects and the kind of bidding for projects in other countries? How is all of that progressing?
So the progress is excellent. We have participated. I had told you last time that we had participated in about 175 number of bids costing around 97,000 crores. We have got around 30,000 crores, either L1 or we have got the LOA. So the strike rate is very good. The metro segment is one of the preferred segments. The first projects like the Indore Metro, they have started giving the results. First overseas projects, Maldives, You will be surprised to know that in last 4 months, we have done the 7 lakh MQ of the dredging and reclamation. It is an extraordinary marine work which is being done by us. So we feel proud of what exactly we have been doing.
Okay. So how will FY24 be different from FY23? Because orders are great, sir, but they will be executed in 24, 25, 26. In terms of the profiling or in terms of the trajectory, how will this year be different?
The difference will be that we started bidding. In fact, the first 2 projects from the market we got in October 21. So it is not even 2 years. So less than 2 years. But if you see the order book, it is roughly around 45% plus that we have got the orders from the market. And some of the orders, for example, Indore Metro, we have got a turnover of till date around 700 crores. So it is getting reflected. The Maldives projects, this year we have got a target of execution for more than 600 crores. Since we have got large number of projects, it cannot be explained over just a 5-minute or 10-minute or 15-minute interview. But what I want to tell you is that in 23-24, there will be a revenue from the projects which we had taken from the market. Over a period of time, the projects which we get from the market, from the bidding, will keep on growing. And the railway projects on the assignment basis will be coming down. So there is a challenge, but we are fully prepared for that.
Okay, great to have you then on the show, Mr. Prasad. Thank you so much for helping us understand really what an order, or rather what a move this big actually would mean for RVNL and how long actually would take to translate. I'm sure we're going to speak again when things are on paper and when you have an exact visibility on this corridor.
Thank you, madam. Thank you.
Okay, let's take a very quick break with news that we are inching towards 20K mark. We're, by the way, at 19,940 on the Nifty futures, so 60 points, and at least we'll make it to 20K on the Nifty futures for sure. REC, Hindustan Copper, Balrampur Chini, PFC, Adani Enterprises, Adani Ports, Tata Motors. That's where all the action is. But when we come back, we'll talk to Shishir Joshipura, the MD and CEO at Praj Industries. Back with the market right here on 80 now, going good for the equity markets as we speak right now. But Praj Industries, that's the one stock which is in focus, given that the Global Biofuel Alliance got launched on the sidelines of the G20 summit. So let's try and understand what exactly does this really mean. Shishir Joshipura, the MD and CEO at Praj Industries, joins in on the show right now to help us understand exactly that. Shishir, great to have you on the show today. Thank you so much. Now, the Prime Minister has in the G20 summit launched the GBA and has also invited all the countries, all other countries that is, to join this particular initiative. How are you reading into this development?
I think this is one of the most important development that has taken place in recent times, inviting a global forum for Biofuel Alliance. And if you would recall, there was a similar success story of International Solar Alliance. And I think the time has come for us, India, to take lead. And that's what is happening under the G20 program. India, United States, Brazil, and 19 other countries have come together to form a Global Biofuel Alliance. And I think this is a very, very significant move, because this means that we are now actually saying that biofuels have a very, very important role to play across the global economies to ensure sustainable development as we go forward in future.
Specifically, what does this mean for the biofuel industry back home and for Praj Industries in particular?
Well, what it fundamentally says is that this is an invitation, and if you read through the details, you will see that this is a program that calls of inclusive growth for inviting Global South to join this journey of biofuels and bioeconomy at large. And what it means is that the countries like India, United States, and Brazil, who are the current leaders in adoption of biofuels in their economies, are actually telling the rest of the world that come join this journey with us. And that fundamentally, and we will make available the technology, the policy directives, the initiatives, the market mechanisms, the how do we develop the whole ecosystem, So there's a whole host of offerings that can go out of these countries to the rest of the world. Specifically to India, we are a leader. As you are all aware, there's an absolute benchmark program that the government launched about EPP20 that we are rolling out to ensure 20% of ethanol blending by 2025. And that means, and that's a program that is well on its way to success. We are way ahead of our milestone that we had put for ourselves. And the world is watching as to how a country like India, in a short period of time, through a very structured policy intervention and through a market mechanism, actually transform the whole economy of its energy and its energy basket. This has also meant that companies like ours, Praj, which is already we have already a very, very large international footprint, over 1,000 installations in 100 countries.
Right. Morning. Now, 35% of the order intake in the quarter gone by was from the export market. Now, with this global focus on ethanol blending, how are you expecting the export market to evolve?
Clearly see that this initiative will create a pathway for us, a very, very constructive dialogue with several countries where it is possible for those countries to emulate what India did and actually benefit from that, because biofuels have multifaceted benefits for the society. From the social angle, it creates jobs in rural areas. From the economic angle, because obviously it creates a lot of wealth in the country. Especially if you're an energy importing country, it makes immense sense to produce your own energy. So dimensions of energy security, energy independence, all of these come together. And above all of this, biofuels are very green in the sense that you actually also abate the greenhouse gas emission compared to what you do today. So this is a very, very positive development. And as we are enabled with under the GBA platform, and when the industry is invited to participate, and I'm sure that will happen pretty soon, we will be able to contribute in terms of what we are able to do and how we can help the other countries also transit to this. And obviously, when that happens, they would like to produce this fuel locally, and that would augur well for our business.
Sure. Shishir, over the longer term, the transition towards cleaner forms of energy is the only sustainable way to grow. And Praj is a player on that. What is the long-term growth roadmap that you have in mind, and what are your own expansion plans then?
We clearly see the whole phenomena of energy transition and adoption of biofuels as a very major movement, and with GBA it will get further boost. You mentioned about 35% of our order book last quarter being export oriented, and we can only expect that to start changing in the positive direction forward. We have a very, very significant position in several markets of the world, Latin America, South Africa, Southeast Asia, Europe, even increasingly now in America and now also in Brazil. So we expect that we will be able to further strengthen our offerings, our presence in those markets, and we will also be able to create a right ecosystem and be a part of the dialogue that goes into building the ecosystems. We are already part of several dialogues in several countries, and we believe that this dialogue is essential to start this journey of adoption for biofuels. We have seen that happens in market after market. We have seen some very positive results that happened to us in several markets of the world where this kind of a dialogue was initiated. And I think under GBA now, we will be able to do this on a very structured basis. So this is extremely positive for our business.
Appreciate your time. Thank you so much for telling us the significant opportunities that this opens up, your expansion plans and business outlook. Time to slip into a very quick break right here on the show. The stock of Praj Industries up and away in trade, but stay with us. On the other side, we get in a view on the realty boom for NBFCs with the management of PNB Housing Finance. Girish Kausgi, the Managing Director and CEO, joining in. Thanks for staying on with us. Let's also take stock of what's happening in the markets as we're trending higher at 19,905, clearly making our way to the coveted 20K mark, which should happen this week as per all the market experts' predictions. And it's solid momentum that you're spotting across the board within the broader universe as well. In fact, just check in on some of the winners in today's trading day. You've got the likes of an Ircon International, Rail Vikas Nigam, Tube Investments, ABB, Rights, Concord. They're all abuzz in today's trade. The likes of Infibeam as well, Nikunj, up and about.
All right, Mr. V. Vednathan, Managing Director and CEO of IDFC First Bank, joins us now. Let's understand from him that what has prompted Mr. Vednathan to sell his shares to GQG Partners and what is the way forward now for IDFC First Bank. Mr. Vednathan, good morning. Thank you for joining us. Very interesting. Now, market perceives that when promoters are selling out, it means that they feel that the stock is richly priced or they feel that the franchise value has lived up to its expectations. But that is not the case in IDFC First Bank. So what has prompted you to sell your personal stake to GQG Partners?
First of all, thanks for asking that question. It gives me an opportunity to clarify. The thing is that you should just, very important to note that this is two legs to the transaction. So you don't note only the sell portion. The entire proceeds of 478 crores is being used to purchase options of the bank, exercise the options of the bank, and I'm paying 229 crores back to the bank itself. Number two, I'm paying tax of rupees 240 crores. Number three, there are some committed courses that I have for which I'm contributing 9.2 crores. So just want to tell you that first of all, I'm not selling out. It's coming back for reinvestment in the bank because these are options issued to me at an earlier stage at a lower price.
So what will be your holding once the option gets converted back into equity?
So currently my direct shareholding and holding in a trust, I also run a social trust which has 50.9 lakh shares of the bank. That's a social trust. So including that and including my direct holding, as of June 30, it was 0.58%. After this transaction, it will increase to 1.04%. So effectively think of it that this transaction is actually increasing my holding, and that's important to note. And including the options yet to be converted, my holding will be 1.23% in the bank.
Right. And whether this it or GQG would be upping stake further in the due course?
No, that I can't talk for. No, that I can't talk for from them, and I have no indication from them.
Sure.
But they had already bought close to like 3.9 or 4%, something like that, in that zone. And together with this, they'll probably go to around 4.7%. That's my understanding. They can talk for themselves.
But your choice of GQG, I mean, this is something which you decided. So why have you decided GQG as the preferred entity where you would like to sell your stake?
No, it's not my decision. When you sell stake, you actually appoint a banker and a broker, and they find the party. But the GQG as such is a $104 billion global fund, and they are really a very premier institution. They've invested in HDFC Bank, ICICI Bank, ITC, JSW. So they have a really good track record of investing in top quality names. And recently they were in news for another large investment. So basically they are a large global. For us, it's a matter of huge privilege for our bank that such a large, well-reputed institution. By the way, they're a very long-only fund. They're not a private equity firm. They have no exit. They don't have a mandated date exit, etc. So the long fund. So for us, it's a big privilege that someone like them has believed in the business model and has bought a stake in the bank.
Nathan, if I look at IDFC First Bank, you've built a build-to-last franchise from an unknown brand to an unforgettable franchise. But somewhere, if I look at the ownership, your personal ownership in the bank, it is less than 5%. So in coming months, quarters, years, can I assume that you would be inclined to increase your stake because the franchise is doing so well, the bank is doing so well?
I can't say.
I missed the last part.
Sorry, repeat the last question again.
No, my last part is that you build an enviable franchise, unknown brand. Yeah. So
Yeah. Now I remember the question. Yeah.
okay.
So the whether I will increasing stake, that's the point you're asking.
I mean, the bank is doing so well. If I look at what, let's say, other bankers who've created such parallel franchises, their ownerships in personal capacity is much larger than what you have.
This happens. If you remember, in Capital First, I had a substantial stake, but with continuous raising equity by merging with IDFC Bank, and then continuous raising equity. So this is a normal part of life for any first generation person. So I don't think I'll be selling anything else for a long time to come now from here on. Because I have, so let me leave it at.
One last.
But there's no plan. The short point is there's no plan to sell any more stock. This was for a specific purpose of paying tax and for investing in the bank. So there's no other plan.
Okay. And final question. I'll just jump the mandate here. You've positively surprised everyone for 7 quarters on the trot now. Are we in for another positive surprise for the 8th quarter?
No, I cannot. No, be very careful, because now the last month of the quarter, so I will not make any comments about the bank. The bank, generally speaking, is doing well, and quarters are always quarters. We look very long. I really request everybody to think about the bank in the long run. Even in the toughest of times, in the early stage of the bank, we never compromised on thinking long. So we will continue to think long. I can't comment quarter on quarter, etc.
Appreciate your time. So glad you could join us.
Thanks so much, Nikunj and Aisha and everybody for this call.
Well, there you go. The entire proceeds of 500 crore will be used to purchase options for the bank. His holding in the bank actually will go up to 1%. I didn't know that his holding in the bank was actually less than 1%. It's only when you look at the data you realize that. There's so many parallels.
I really would have imagined it would be much higher.
I also thought as much.
You did,
but over the years, it gets diluted. See, you've got 2 parallels here. One, you got Kotak Mahindra Bank, where Mr. Kotak's holding is one of the highest. As at an individual capacity and what other banks have. Then you got Mr. Parekh. Over the years, he never participated in the fundraising. The bank needed capital. His holding is actually less than 1%. I mean, for a man who built world's 4th largest bank, and in a matter of less than 30 years, and HDFC Bank and HDFC Limited combined less than 40 years actually, his ownership is actually less than 1%. So you got really HDFC Bank run by professionals completely, ICICI Bank run by professionals completely. That's not the story when it comes to RBL. That's not the story when it comes to Kotak Mahindra Bank. So it's very interesting what the Indian financial sector per se actually has seen. I mean, you look at the new age banks now, AU, or for that matter, Bandhan, or for that matter, even which are the other ones? All the small banks have recently gone for RBL. The promoter holding by default is very high. And that is something which is very different than what the big banks have. The only exception there is Kotak Mahindra Bank.
Yeah. Okay, that's the take on banks. In fact, let's stick it with the financial sector, and let's welcome on board Girish Kuzgi, the MD and CEO at PNB Housing Finance, as well, joining in on the show right now. Mr. Kuzgi, great to have you on ET now. Wanted to understand about the momentum in the real estate, which is clearly continued now. Several launches which are expected as well in the first half. How is it that it's translating into traction for your loan book?
Good morning. I think if you look at the industry, both real estate and housing per se, I think it's doing pretty well for last over a couple of years. And this will continue for next at least 5 to 7 years time. And with a lot of focus from central government and state government, I think various state governments have come out with a lot of innovative schemes. And there's a lot of thrust on housing, especially on the affordable, and especially housing in some of the big cities. So I think keeping all this in mind, trend is going to be really, very good for next few years.
There seems to be a lot of, I won't use the word war, but there seems to be a very different terrain when it comes to the entire HFC or the home loan market. SBI has become extremely aggressive. You got, NBFCs like yours who are giving now loans at a very attractive price. At a time when everybody is fighting for liability and the interest rate in the HFC space is very competitive, how do you see the terrain moving?
So if you look at entire retail space, I think housing is one asset class where the scale could be to any extent without much of risk. So I think recently there were reports that unsecured within retail had increased significantly. And obviously, it comes with the additional risk. And therefore, I think all the banks, all the institutions, non-bank, be it NBFC or HFC, there's a lot of focus on housing because the risk in housing is predominantly less when compared to obviously most of the unsecured products. And with the entire real estate space doing well, housing doing well, there's bound to be a little bit of competition. But this competition is not new. It's been there for the last 3 to 4 decades, and this would continue. But having said that, there's enough space for new players to get in, existing players to penetrate and try to increase their share.
How do you see the entire liability franchise for HFCs moving at a time when interest rates, they are not likely to go higher, but they will not come down, which means that if I look at the wholesale borrowing market, that has not gone down. But in terms of the trajectory seems to have topped out.
In fact, if you see now, we have seen very recently that the rates had peaked. There was almost close to about 250 bips increase in PLR. And now we have moved to a stage where we will see more of consolidation as far as the interest rates are concerned. So I think this is the best time for non-bank companies to really try and grow the book profitably. And we see that after a few quarters, rates might start coming down. So this is the best time. Demand is quite good. Number two, there's a lot of focus from everyone. And number three, the rates have peaked and now it has reached a consolidation stage. If you look at the rates, what we have now, and if you compare with the rates pre-COVID, it is still quite reasonable. And in fact, this would ensure that all the companies would do well and also would be able to make good profits.
Be sticking by with your guidance of 17 to 18%, or would you up that?
No, I think we would stick to our guidance. We had guided disbursement growth of 22+% and book growth of 17 to 18%. I think as a company, there has been a lot of transformation since last few quarters. And you've been seeing, for last few quarters, how the company has transformed. Today, if you see, our focus is more on retail and corporate is degrowing. I think it is as per plan. So I think our strategy would continue, our guidance would continue for this year.
Could you also give us a little bit color on, the trends that you're witnessing in your loan book as to how the prime segment and how the affordable housing segment are both shaping up?
See, if you look at home loan segment, there are basically 4 segments: super prime, prime, affordable income, and affordable assessment based. I think in last, let's say over 12 months or so, affordable has seen a little dip in demand, but I think that is in the affordable assessment segment, not in the affordable income based. Now, as PNB Housing, we largely focus on prime and affordable income base. So I think these 2 segments have witnessed significant increase in demand, and this would continue. Even the super prime is doing pretty well. Affordable assessment, obviously, given the structure, because it's more of assessment, the dependency is more on assessment rather than income documents. And therefore, the ability of any given organization to grow this book would be a challenge beyond a particular point. So I think this is where we've seen a bit of less demand, but even this is short term. I think now it is slowly picking up. So overall, as a housing industry, all segments are doing pretty well.
What about the competition facing from banks? How is that shaping up? Is that impacting business?
See, there is competition. I think competition would intensify in Q3 and Q4 because the year would come to an end. Obviously, H2 would be more intense in terms of competition. But having said that, this has been there since many, many years, over 3 to 4 decades. So competition is something which is quite normal. We saw only abnormal competition during and immediately after COVID. I think we have not seen that kind of competition in the last 2.5 years. And I'm sure going forward in the normal course of business, when the economy is growing, we would not witness that kind of competition. Otherwise, generally in Q3 and Q4, there'll be a lot of price, mainly in terms of price competition. But I think since we cater to a different segment altogether, I think we'll be able to stick to our guidance. And even the market is doing well. Most of the companies in this space will do well with I think compared to other products, within the overall retail.
Appreciate your time. Thanks much for joining in and sharing with us that outlook. Let's also bring on board then the management of Brigade Enterprises. Lots to talk about in terms of the demand expectations from the festive season, what the outlook is when it comes to luxury housing. Is that trend really picking up? We've got Atul Goel. He's the CFO of Brigade Enterprises with us on the show. Atul, thanks so much for taking time out. Avan, this side, just wanted to get in a view as to what the outlook is when it comes to the festive season fast approaching. What are the expectations this time around as compared to last year?
Good morning. No, I think expectation is very good. People want to own home and there is a large appetite in the market. We as a company are more into mid-income housing and I think mid-income housing is doing very, very well. I would say price range of around 50, 60 lakhs to 1.5 crores or so. So our maximum luxury housing itself is also doing well. There is a lot of demand for that. But if you see the report, 62 to 65% of sales today is in mid-income housing, and and we think that they should do well going forward. And there are reasons for that because there is a interest pause there. There is a change in demographic of the investors as more millennials and Gen X are investing into the property. And if you see NROC report, 61 to 65% of people today want to invest in real estate. So it's a positive demand. There is a consolidation of developers. All developers are doing right thing. They are seeing to it that inventories are managed very, very well and they don't oversell themselves. So I think the timing is good, and this festive season there should be a very good demand Q on Q basis as well.
Okay, and given that Q1 was a bit sluggish, there were a few delays in launches on account of the government change in Bengaluru. What is the situation right now? And can you highlight for us some of the launches that are planned ahead of the festive season?
So we have 7.5 million launches planned till rolling 4 quarters. We are targeting that maximum launches will happen in Q3 and Q4 because right now in Karnataka, because of the government change, still approvals are not that is not coming, and things are improving, but going forward slowly it should start coming. So we are thinking, we are planning that Q3 and Q4 there'll be bulk of launches, mainly in Bengaluru, and 1 or 2 launches in Chennai as well.
Right.
Okay.
You know, the general expectation is that the second half is expected to be better than first half for most developers. Do you think this time around maybe you could cross that 4,500 crore rupee of pre-sales mark?
We can. I cannot say that. It depends upon how the market is going to behave. But there are some headwinds also, like inflation and as well as the general election. But seeing the demand and the way the reasons I told you, definitely we can cross 4,200. At least we are aiming for that.
Good to hear that. You've also recently acquired a land parcel in Chennai, right, with a development potential, as we understand, of 1 million square feet. Considering the average pricing trends, is it fair to assume that this could contribute upwards of 650 around crores of pre-sales value? And also, what's the scheduled launch date?
No, so the area which is there is in OMR, and we have developed our World Trade Center there with GIC, and it has been doing very well. Even residences, it has been selling around 14,000 or so there. So we target that GDV of this pre-sales value of this property will be in the range of 1,000 crores or so. This is a very prime property of 6.5 acres and 1 million just on the OMR road. So we are looking more than realizability of 1,000 crores in this property.
All right. Can you also provide an update on the TVS land launches? Is that on track, and what exactly kind of a contribution that you expect? Because You've also made a slew of land acquisitions of late. Can you tell us a little bit more about the debt?
So TVS, we are very basic approvals are in place, and now more or less approvals are going place. We are targeting to launch that parcel by Q4 this year or maybe Q1 next year. But we are targeting that Q4 we should be able to launch. The pre-sales value of that property is around 2,200 crores, and we are very hopeful that we should be able to generate that type of pre-sales there. Of course, debt, there has not been any increase. We are one of the companies where we have a zero debt in real estate, that is commercial sale as well as residential sale. So we continue to have a zero debt in real estate segment because sales are good, working capital cycles are good. So we don't think that debt should grow. Whatever debt is there is in LRD, which is 3,200 crores, and some in hospitality, that will continue. So whatever debt increase will be there will be in the form of LRD only. We are anticipating right now that we should not go, we will not be taking more debt in the residential segment.
Fair enough. And can you just tell us a little bit more about the asset-light model of expansion via JDAs, JVAs? Is that something that you're looking at? I only ask because a lot of your peers are now adopting this mode. What are your thoughts? Would it be biased towards land acquisitions perhaps going ahead?
See, Brigade, if you see the history of 36 years, we have been doing JDAs, and this is a very popular way of asset-light model in South India, and this has been followed for years here. So in our strategy also, generally, we prefer JDAs, but it depends upon the land parcel, how valuable that land parcel is, and how much sale realizations you can do it. But definitely JDA is a very, very good option. We generally, if you see in our land bank, 50 to 60% is JDA and 40% is outright sale. It all depends as to how you are working on your margins for the company.
All right. And what about luxury projects? Because I understand that they've been performing quite well as compared to the affordable or the mid segment. Do you see this trend continuing?
See, luxury housing, yes, they have been doing well, but South is generally a mid-income housing market, and we do bulk of our sales in mid-income housing. Yes, of course, like Chennai Mount Road will be a ultra luxury apartments. Even in OMR Road, what I was telling was a luxury apartment. So luxury apartments will be there, but if you say that large part of sales will come from luxury apartment, I don't think so. Majority of our sales will come from mid-income housing.
Okay, and are you looking at recalibrating your portfolio? Would you now maybe cater to more higher ticket homes?
No, I think we are happy with mid-income housing. See, the market where we operate, that is Bengaluru, Chennai, and now we are going to Hyderabad. Hyderabad is a bit luxury apartment where there has been raise, but Bengaluru and Chennai are a very price-conscious market, and we think that going forward, mid-income housing should be a good stay, and we would continue to continue in this mid-income housing. Yes, of course, there is no ban that we will not launch affordable or luxury housing. As and when the market demands, the launches will happen accordingly.
Good to have you on board. Thanks so much for sharing with us that outlook. So that's the management speaking to us about how the expectation from the festive season looks strong. They have also got luxury and mid-income housing that could look better, and they're looking to generate close to 2,000 to 2,500 crore rupees in pre-sales from TVS. Tell you what, we'll slip into a very short break right here on the show. Come right back for lots more on the other side.